Now let me guess, a lot of investors, including yourself watching this video, either already hold onto shares of JEPI, the JP Morgan Equity Premium Income ETF, and of course JEPQ, JEPI's brother or sister, the JP Morgan Nasdaq Equity Premium Income ETF. And for the most part, like both these ETFs quite a bit, not only because they offer a boatload of income potential from day one, but also have both grown over time pretty significantly. Now across all my holdings, I currently hold hundreds and hundreds of shares of both JEPI and JEPQ, and have held onto both these ETFs for quite some time now. And these ETFs combined pay me probably somewhere around $500 per month on a monthly basis, every single month that is, plus have also grown since I started holding onto them. Now, if you like both these ETFs, I promise today's video is going to be perfect for you because we're going to be going through another very similar ETF to both JEPI and JEPQ, but offers some things that neither one of these ETFs do, and potentially, at least in my personal opinion, is going to outperform both of these over the next decade or so. So if you love income generation and if you love growth potential, well, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So the ETF that we're talking about, the ETF that's probably going to outperform both JEPI and JEPQ in my opinion over the next decade or so, is this relatively new premium income ETF known as ticker symbol GPIQ, which I personally have been buying for quite some time now, but really want to load up on a lot more shares in 2025. Now, the way this ETF works, first of all, it says objective, seeks current income while maintaining prospects for capital appreciation. So again, if you're an investor like myself that is focused on income generation, but also wants prospects for capital appreciation, wants to see your net worth and your portfolio to grow over time, then this ETF's objective matches almost exactly probably what you're looking for. Now, to compare that objective somewhat to JEPQ and of course JEPI, it's more or less the same thing. Both these ETFs are seeking consistent income, but again with lower volatility and having capital appreciation or the potential for being sort of secondary. I mean, after all three of these different ETFs have premium income ETF in the name, so you're really going to be focused on income here. But let's read on and understand more about GPIQ, and I'm going to share with you guys why I'm so obsessed with this ETF and why I think it's potentially going to outperform both JEPI and JEPQ over the next decade. Now it says reasons to consider investing, seeks consistent monthly distribution, so nothing different there considering JEPI and JEPQ both also do so. It says aims to generate a consistent monthly distribution rate, generally from option premium and equity dividends. Now this is where GPIQ, for example, is going to be very different compared to JEPI and JEPQ, and this is because this ETF GPIQ is going to offer a consistent monthly distribution, which means it's more or less going to be the same every single month, and you're not going to have certain months being tiny or certain months being massive like we've seen in the past from JEPI and JEPQ. Now, I personally don't mind too much the fact that JEPI and JEPQ don't necessarily offer a consistent monthly distribution, but later on in the future, when I plan on using my income throughout my portfolio to pay for things like expenses, it is going to be pretty nice to have lots of different holdings pay more or less the same exact amount every single month, just because you can sort of more or less have a gauge on how much you're expecting. Now next it says core equity exposure with lower volatility. It says provides core equity exposure to the Nasdaq 100 index and dynamically sells call options, allowing for participation with rising markets and potential outperformance in negative to flat markets. So just like JEPQ in specific, this ETF is going to have the Nasdaq 100 index as an underline, which means there's going to be some potential for upside even though there's a cover call overlay, but also the potential for a lot of option premium because the Nasdaq 100 is pretty volatile. Now, shout out to Kevin Sean from Seeking Alpha. He wrote an article breaking down GPIQ strategy, and this is one of the main reasons I'm so fond of this ETF specifically. It says GPIQ strategy, at the money call options on 25 to 75% of the portfolio. Now again, every single covered call ETF across the entire market is going to have their own specific strategy, their own way that they sell call options, again, if that's what they do. But for me personally, GPIQ strategy seems to be almost as perfect as anything else I've ever came across. And that's because with 25 to 75% of the portfolio basically being covered, there's going to be a massive potential for option premiums to be earned and also some protection for downside. But because the entire portfolio is not going to be hedged, there's also going to be some upside potential for the actual price of GPIQ which is what we've seen at least so far since inception. But to read on, Kevin Sean said GPIQ is a fund that holds the constituents of the NASDAQ 100 while selling QQQ call options on 25 to 75% of its portfolio, depending on market conditions per the prospectus. It says the overwrite level, the ratio of notional value of call options sold by the fund to the market value of the equity investments in the fund portfolio is generally revised each month, and the fund expects that under normal circumstances, it will sell call options in the amount that is between 25 and 75% of the value of the equity investments in the fund's portfolio. Now, this might be a little bit confusing to some of you guys that aren't super familiar with options trading and or selling covered calls, but let me make it very simple. When you're selling covered calls and all the equity underlying, there's not going to be that much upside potential whatsoever because covered calls basically caps your upside. But as you can see right here, since inception, since October 23rd of 2023, GPIQ, which is a premium income ETF, again, premium income ETF, is up 31% more or less. And again, this is all while paying around a 10% yield. Now again, the NASDAQ 100 during this time frame has performed pretty well. No one can really argue that. And of course, NASDAQ 100 can be volatile. We could also see it dip very soon here or anything of the sorts. But at least during a time frame where the NASDAQ 100 has been trading very well, which again, historically for the most part, the NASDAQ 100 has been very strong. GPIQ has offered a boatload of income potential because of that 25 to 75% of covered call overlay, but also has had the ability to grow pretty substantially, again around 31%, which is massive considering it is a income focused ETF. Now lastly, it says seek to deliver attractive income with lower correlation to traditional income sources and their risks. So far, I hope some of you guys understand why I'm so bullish on this ETF. And this is basically because of the fact this ETF utilizes sort of an income-oriented strategy while also having a ton of potential for upside. Now, I know a lot of you guys, just like myself, are very interested in the income generation that GPIQ offers also. And like I said, it's very consistent, around 40 cents more or less per share per month is what we've seen over the past year or so, sometimes a little bit more, sometimes a little bit less. But the most recent payouts are 42.85 cents, 43.08, 41.37, etc., etc. Now, if you annualize this out, we're talking around a 10% yield, which is not bad whatsoever, especially because, once again, there is a lot of upside potential when it comes to this ETF. Now, by no means am I saying that the JP Morgan NASDAQ Equity Premium Income ETF, JEPQ, is a bad ETF, or of course JEPI. Like I said, I still hold both these ETFs in my portfolio, but I do want to make something very, very clear. When it comes to buying any ETF, especially covered call style ETFs, you have to understand what the actual strategy is in the underlying ETF and see if it matches what you're looking for. And I say that because certain covered call style ETFs are going to have more of a risky approach, maybe a little bit more of an aggressive income or growth approach, and some of them are going to be sort of a set it and forget it, sell a call monthly at the money, etc., etc. But for me personally, as an investor that does want exposure to income, which GPIQ definitely offers, we're talking almost 10%, and again, very, very consistent, but also offers the potential for capital appreciation, which is what we've seen so far because the NASDAQ has done so well. I'm personally bullish on the NASDAQ long term, but what a better way to gain some exposure to the NASDAQ than doing so in a premium income oriented setting like GPIQ offers. So now that we talked about GPIQ, I shared with you guys a strategy of this ETF, how much the ETF distributes on a yearly basis, and even the performance as far as ETF price so far. I also shared with you guys the fact that I personally think because of the underlying strategy, this ETF has what it takes to outperform JEPI and JEPQ over the next decade or so. I lastly, most importantly, want to hear from you guys down below. If I were to ask you in the entire covered call landscape, all the ETFs out there, what's going to be the #1 performer over the next decade or so? Drop the ticker symbols in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.